We are excited to welcome you to our May Northwoods Financial Series session. The Northwoods Financial Series is a free series we host at Park City Credit Union. Every month we host a different educational session. My name is Lisa Kramer. I am a member of the Park City marketing team, and I will be your moderator. And I'm excited to introduce to you our presenters, Erica Kirby and Ashley Smith.
Hi.
Hello, we're so glad to have you both here, and I'll give both of them a little introduction. Erica Kirby is the mortgage specialist at Park City Credit Union's Rhinelander branch. Erica joined the Park City Credit Union team in February of 2015. As a mortgage specialist, Erica handles commercial loans, refinances, purchases, and new mortgages. And Ashley Smith is a realtor at People First Realty Group in Rhinelander. Ashley has worked in the real estate industry for 20 years. During this time, she has helped countless families, investors, and individuals achieve their dream of home ownership. So welcome both. We are so glad to have you here. So if there aren't any questions right away, we do have a list of questions that we received ahead of time. But first, Ashley and Erica, would you like to say a few words to give our attendees some time to prepare their questions?
Well, thank you for coming. Thank you for participating in this. I think it is really great that Park City is offering this, and I think the more educated someone can be before starting the home buying process, the better. It can only make the process go smoother for everybody. So I'm just really excited to do this.
Well, thank you. And Erica, do you have any words?
No, just to say, it's easier to know ahead of time what you're looking at, what you need to do to prepare yourself for the process, as it is time consuming and there's a lot of usually unknowns when you start. But to be able to know where to start is going to be the best thing.
Well, that's a very good point, and I guess that leads into one of the first questions that we received. And I think, like you said, if you've never purchased a home before, it can be daunting, and you're like, where exactly do I start? So I wanted to ask, where do you start? Should you be driving around your community looking for homes that interest you? You stop by the credit union, talk to the mortgage lender, or do you reach out to a realtor right away?
I would say get pre-approved first, because then you're not wasting the realtor's time with looking for a house that's not going to fit within your budget. Or if you have credit problems, we can work to get those cleared up beforehand, so that you're sitting in a good spot to start.
Sounds good. And for those who are brand new to the home buying process, I was wondering if you could give us just a brief, kind of high level of overview of these are the steps you're going to have along the way in terms of buying a home.
So usually the first step is get pre-approved. Then you know what you're looking for, what your budget is, if it's a budget that's comfortable for you. Then you can start looking for homes that are within your budget, and then see where that's going to lead you, whether it's, okay, this is a house I want, or I found a cheaper house and it's still within my budget. And then basically it's, waiting for title work to come in, which we will take care of, appraisals, which we will take care of. And then if there's stuff along the way that you can do to get yourself ready for the home buying.
Hey, sounds easy enough, right? just those few steps and you're all set. Well, and I wanted to talk a little bit about the mortgage market right now, because it is certainly a seller's market right now. And Ashley, if you could talk a little bit about the inventory in the Northwoods, especially, in comparison to last year, would you say inventory is about the same? Is it looking up? Is it, lower?
So the first thing I can say is, in this market that I'm about to kind of just explain, never has it been more important than to go see stop by the credit union and get that pre-approval first, because most sellers, to be competitive, you have to have your pre-approval in hand when you meet the realtor. That's just how aggressive it is. Inventory is continuing to get worse. We are fluctuating between a 1 and 2 week inventory of properties. So typically right now we have just tons of buyers in every price range, which is unusual. Usually it's just, certain people, most people are looking under 150, or most are looking between 150 and 250. Well, right now we have buyers in every single budget and every single price bracket. The inventory is down, and the most difficult and the hottest price range is the 150 to 250, outside of, like the hearts of towns, that want to be out in the country. It's devastating low inventory. And everything is multiple offers. And so my biggest advice is, when you get that pre-approval, if it's 200,000, for example, I wouldn't be looking at anything above 185, because you're likely going to have to offer above asking price. So you have to kind of build in that buffer in your budget in advance. So, but it's cheaper to get money right now, but you're definitely paying more for a home.
So inventory, like you said, is low right now, but at the same time, mortgage rates are great if you're a buyer. They've been at historic lows. So with those two considerations, low inventory, yet, you can get a pretty good rate on a mortgage, would you say is now a good time to buy a home?
I would say that, and the advice I give to a lot of my clients is it makes sense to buy if you're moving up, you're moving down, maybe you're moving to a different area, or it's a relocation, or you're doing something like going from off water to on water, or the reverse of that. Possibly not the best time to make a lateral move. And that's something, you kind of would have to, Erica can help with, is kind of seeing like how that math kind of works out with the interest rates being low, because right now some of the prices seem higher, but some people's payments are actually lower because the interest rates are so good. So everybody's situation is just very different. So it's good to talk to, your lender and get a good understanding of what that's going to cost, and how to be prepared, and just understand what that money's going to cost.
So continuing on this topic of inventory being low, you think, hey, maybe instead of buying a home, I will build a home. Well, it's also pretty expensive to build a home right now. I just saw a headline from CNBC that came out at the end of April, and, the soaring lumber prices add $36,000 to the cost of a new home. So for those that are looking to build right now, do you have any advice for them?
It's likely not going to happen in the Northwoods soon, because one, we have a shortage of builders in general, not to mention the ramped up costs on all the materials, and every contractor involved in building a home. I mean, they're booked out. Some are booked out 2 years. That's how far they're booked out. So as much as there's not a lot of inventory of existing homes, the cost of building, I've had people tell me, like, for a 1,200 square foot ranch, not manufactured, but a modular home, they've gotten quoted $300,000. I mean, the prices are exorbitant. If you're going to buy land and maybe you're going to build on it, you know, when things start to come down, that would make sense. But otherwise, I think it's smarter to hold out and buy an existing home right now.
Yeah, and you hope things will be returning to, pre-COVID levels soon. But as we've experienced, there's been shortages and price increases in a variety of products. So, and lumber being impacted by one of them. We did get a question that came in through the chat, wondering how long is the pre-approval good for? Is it 30 days or longer?
Pre-approvals are usually good for 60 days. It's based on the credit report. So when we pull the credit report, we base it off of that date.
All right, thanks for answering that.
You're welcome.
So I know Ashley and Erica, you had sent me some common questions that you receive from first-time home buyers. And Ashley, one of the questions you sent me was, do I need inspections and how much do those cost? So what is your answer on that?
Yes, yes, yes. Yes, need, required, not necessarily. Again, you want to ask, you could ask your lender what is required, but in almost every situation, a home inspection is never going to be required. And some may, depending on the loan program, may only require a safe water test, but most of the time they want to know the well and the septic is good. But it's the biggest expense of your life, and there's no takebacks. Once you close, the house is yours. And even if you're in a situation where what is kind of becoming common is that because it is a seller's market, sellers are less apt to make repairs unless it's absolutely positively necessary for a loan. And so a lot of buyers are in a position where they can't ask for much. That's fine. You can certainly have language in your offer that you're not going to ask for something, or the seller can say it's as is, which is just them saying, we don't want to put any money into it. We don't want to fix it. But that never, never, ever, ever allow your right to inspect be taken away. You should always have the right to, even if it's just for information, and even if they're not going to do anything to fix it, it's going to be, a 40 to 60 page report that really looks over every aspect of the home. And especially for first-time home buyers, it's so important that you get that report. Your realtor sees it. Your realtor sees so many of these every single day. And sometimes, and I see it a lot, a home buyer might read that report and they just, I'll fix that. That's no big deal. And as a realtor, I'm thinking about this young family buying a house and they don't understand like this, the way this electrical maybe is a huge fire hazard, or there's just numerous safety issues. So, and a well and a septic will cost a fortune to replace. A roof will cost a fortune to replace. Knowing that these electrical is expensive, knowing that these things are up to speed and in good condition, for your own peace of mind before spending any kind of money on such a big purchase is vitally important. And I would never, in good conscience, advise somebody to waive the rights to inspect.
And how much would you say that a home inspection costs?
The home inspections average around $350 to $375. It can go up from there depending on the square footage of the home. If it's quite large, or if you wanted outbuildings inspected as well, maybe there was, 4 or 5 garages on the properties, that can add to it. And then there is also specialty inspections, like if you needed a chimney inspection, the fireplace looked at, a pool checked out, radon testing can range anywhere between $75 and $150. And then a safe water package, it's all packaged together, that runs about $425.
In this competitive market that we're in, do you see people waiving the home inspections and just saying, I'm going to buy as is, and taking that risk?
I do see it. Unless it's an investor client of mine, my buyers don't do it after I have kind of educated them on the risks of it. But, you know, when I'm representing the seller and I get offers, I do see offers come in with that in there. And oftentimes, you know, I've gone back and said, are you sure they don't want to maybe the right to inspect, but, you know, the seller's not going to fix anything, but, you know, you sure you don't want to just maybe still just have the time in the window and the contingency just to look, you know, because I don't want to see a deal fall apart, you know, because 3 days after acceptance, the buyer talks to somebody who tells them how important it is to do one, and that right was taken away from them. So even if, you know, they have the right and maybe they don't exercise it in the window that they have to do it, I think it's important to include it. And some people do change their minds and want to do it. And a seller's market, you know, maybe it may be that, but, you know, some things to me are just too risky for that dollar. Obviously, if they say write it this way, I have no choice. That's my job. I have to write it that way. But I would certainly never, ever, ever suggest doing it.
So if you're a first-time home buyer, and I'll say too this, I'm a first-time home buyer myself. I've never purchased a home before. There's a lot of terms that you hear, and you've never heard these before. You're just like, what is all this? I feel like I have to, the whole new dictionary just on home buying. So Erica, maybe I'll throw some of these questions over to you. First question is, what is escrow?
Escrow is what we collect for your property taxes and home insurance to cover what it will need to be when it comes due. So at the end of the year, your property taxes have to be paid, as well as your home insurance. So whenever that comes due, we always collect a little bit from your monthly payment. So when you make your total monthly payment, it's included in there. So it's one less thing that you have to think about when the monthly payment comes due. You have it. You're like, okay, it's there. I have it for the end of the year, and I won't have to worry about it. And we'll just pay it when we get the bill.
All right, I'll keep firing away with some terms at you. What are closing costs?
Closing costs are the things that we need for, you know, title insurance, what we have to have for the recording of the mortgage and the deed. If there is a closing service that the title company needs because they're closing the loan. Credit report fees, flood fees to make sure your home is not in a flood zone. And then appraisal. So we have to collect up front for that.
And I've got one more for you. What are prepaids?
Prepaids are what we collect for like property taxes and home insurance. Basically, we have to collect it up front to make sure that it's going to be covered when we close.
And Ashley, I'll throw a term your way. So what is earnest money and how much should I offer?
So earnest money is a good faith deposit, and it's typically due anywhere between, it's how we write it in the contract. So it could be 5-7 days within of acceptance. And that money is to protect the seller in a sense, where you are not supposed to be able to just wake up tomorrow and say, oops, I changed my mind. I just don't want the house. And it's 2 days before closing. You've done your inspections, you've waived them, your loan has been approved, your appraisal's been done. There's no contingencies left, and you just decided, hey, I don't want to do this anymore. So then they might be entitled to your earnest money. However, earnest money in the state of Wisconsin has to be a mutual release of earnest money. So both the buyer and the seller have to agree on who's going to get it and the method they'll get it back. And if they can't, then an attorney is brought in to dispute that and sort that out. However, if you successfully go to close, that is subtracted off the purchase price. That's money you've already got in there. And I believe, correct me if I'm wrong, Erica, that let's say you had to bring $10,000 to the table between closing costs and down payment, and you paid $5,000 earnest money, you should only have to bring $5,000. Is that right? Because you're getting that credit. Yeah.
Yep.
So it is subtracted. You do get credit for that in the end. And as far as how much I would put down, it really depends on the purchase price of the house. It's incredibly difficult to lose earnest money in the state of Wisconsin. So it doesn't carry as much weight as many people think. But typically I would say if you're buying a home under 150,000, I would do, anywhere between $500 and $1,000. And once you start getting over the 150, 200,000, a good mark would be 1% of the purchase price is probably going to be fine. But that is negotiable. It's whatever you want in the offer, and the sellers can counter that and ask for more if they wanted to.
So Ashley, I heard you mention the word down payment. So as a first-time home buyer, how much do you need for a down payment?
Well, depends on the loan. It definitely does. And I'm sure Erica can take the lead on this one, but my advice on this in the seller's market is a lot of the first time home buyer loan programs, you don't have to have as much skin in the game. So it is really good to talk with your realtor about all the different ways you can make your offer a little more attractive, because they are seeing that, not just that you might have a more restrictive on condition type of loan program, but also that you're not really you don't have to put a lot of money out. So there are other creative ways that we could talk and figure out how to make your offer maybe more creative. But I think, Erica, you could probably go into the down payments a little better.
Yeah, so there are a couple different programs out there. The one for first-time home buyers is conventional loan, as long as you have a decent to average credit score, I would say. Usually above 680 to 700 is more attractive. It's 3% down, and it's called a first-time home buyers loan that you can get. The other one is an FHA loan. It's 3.5% down. That is a government loan. So, if your credit score is a little bit lower because you're building your credit or you've had some past credit issues, that's the one we can look at, as it's a little bit more attractive to past credit issues. There's also the USDA loan, which doesn't require any down payment. But again, it's another government loan that's a little bit not for the lower credit scores, but not too low. And then we also have, if you're a second-time home buyer, you can go as little as 5% down on the conventional world, or you can do in-house for about 20%.
Thank you both for sharing all that information. I just want to invite everybody on the call, if you have a question that you'd like Ashley and Erica to answer, feel free to utilize the chat box and type your question in there. All right, so as you know, we keep the theme up of this as being a seller's market right now, and you talked about making your offer a little more attractive. Ashley, do you have any insider things that you can share with us on what you can do to make the offer more attractive? And I do have a personal question of my own. I enjoy watching the HGTV from time to time, And I always, from time to time, there's like these couples that write this personalized letter, to the homeowner about how this is their first home, they're going to have a family there. So I want to know, do those letters work? And do you have anything else you can share with us to make your offer a little bit more attractive?
Well, excellent questions. And I'm going to work a little backwards. I'm going to talk about the buyer love letters, is what we call them. And for those that are joining or will watch this, a buyer love letter is, dear sellers, my name is Ashley. My husband's name is Jeremy. We have a beautiful baby girl that we maybe adopted last year, and we just moved to the area, and I'm going to be working at the school, and my husband is in the military. None of that's true, except my husband is Jeremy. And, can you present this with my offer? The National Association of Realtors, for which we get to call ourselves Realtors by being members of that, have trickled down that they don't like those. They feel that, and they want us to stop allowing them because it could be construed as a fair housing violation, because sometimes there's pictures in there, sometimes there's details that might make someone pick someone based on their income status, their family status, their race or ethnicity, religion, and we just can't have that. So they're not supposed to be used anymore, and I would unfortunately discourage my clients now from doing that. That being said, so there's a variety of different ways. Obviously, if you can get yourself in a conventional loan, that's going to be the strongest option to make your offer the most attractive. And the reason is FHA and USDA, they do have stricter criteria for the home when you buy it. So you have part one is your home inspection, and part two is the appraisal. Well, when you're getting a conventional loan and an appraiser goes out, they're basically just determining the value of the property. But when a USDA or FHA appraiser goes out to appraise a home, they're looking for other things too. And some unusual or common things that are written up might be as small as smoke and carbon detectors, not having GFI outlets where they're supposed to be in the home. Maybe they have fuses and not circuit breakers, missing hand railings, trip hazards could be. One of the weirdest was a pipe that drained the furnace condensation line, goes across the floor into the floor drain. I see it in a million houses, and that was a trip hazard that has been written up. Maybe broken glass in, a window, really bad busted up concrete. So there's a variety of things. If we're just talking about like wallpaper and shag carpet, we might be okay. But when you just start getting into the grand scheme of things for a seller, when they list their house, they are listing it based on its current condition, its location, and not basing it on the fact that the buyer might come in and need things for their particular loan program. So if it is a home that needs, and I do think it's important to listen to your realtor if you're getting these first time home buyers loans, because we're in a lot of these homes. So sometimes we don't even need to go in them a second time to tell you that's just not going to work. Investment fixer uppers, stuff like that. That's not what FHA and USDA is for. It's to get you into affordable, safe housing with as little out of pocket as possible. And so, if you're FHA or USDA, some of the ways, and maybe not everybody would agree with it, but this is what I would, consider is if there's just small things. I've had buyers that have said, look, I have like $2,000 stashed. I'm willing to put in a little bit if some things come back that have to be done for my program if you pick me. Now, in a normal market, that's not advisable. And maybe an attorney would say, hey, why are you putting money into a house you don't own? Well, this is where we are right now. So if you have that kind of, a little bit extra and you're like, well, I'll buy the smoke and carbon detectors and I'll have a guy run over there and put a handrail on, for that. And it's smaller scale stuff. That's okay. Some people might have extra money and they're paying appraisal differences. So they might say, okay, I have a purchase price of $300,000 agreed upon in this contract. If the appraisal comes back low, I'll make up the difference up to X amount of dollars. So maybe if it comes in at 275, I'll pay $5,000 over the appraised amount, but I'm certainly not going to pay 300. So it kind of helps a little in both directions. So those two things are good. You can also say, look, I'll buy the property and not ask you to fix anything. I want my right to inspect. And then when I get that report, it's going to be yes or no. I'm either going to move forward or walk away. There's not really, any in between. But again, I'm not one who leans on waiving the inspections. I just don't think it's worth it. But you have to be prepared to go above asking price right now. And that is something we're struggling to get buyers to understand. And that's why they hear their pre-approved amount. And that's where they're looking. And then if they're up to 200 and the house is 200, they can't compete because everybody else knows that they got to go in at 205 or 210. So you have to prepare yourself in advance that you're going to pay over asking price. You can go back and talk to Erica and say, well, okay, if I'm paying 10 grand over, how much is this going to cost me per month? And I think you'd be surprised how little it's going to cost you right now to pay that extra 5 or 10 grand on a home. And it's just what absolutely has to be done. And I'm seeing a variety of different things. Again, more common with conventional buyers. I'll pay part of the seller's closing costs. I'll pay half the commissions. I'll pay my buyer's agent commission instead of having the seller pay that. Just all sorts of different little ways you can kind of finagle things around to maybe make yourself, or one of my favorites, just shorter time frames. It's super simple. Like I'll get my inspections done in a week. I won't wait 21 days to do my inspections. That's really attractive. And to me, I always tell my buyers, when you go to get that pre-approval, there's going to be more loan work along the way, lots more loan work. So when your lender emails you and needs something, have it there yesterday. You have to be responsive. Things move as fast as you're moving. If you're not going to answer the emails or the phone calls and supply the documents that are needed from you to keep the transaction moving along, it'll create delays.
Thank you for sharing all those tips, and good to know that not everything you see on TV is how it is in real life, especially with the letter situation. So we got another question in the chat, and Erica, I'll throw this question your way, and this goes back to when we were talking about programs for first-time home buyers. Are there grants available, and would I have to have that approved before? And then also, is there help to assist in applying for the grant?
I personally have not worked with anyone who has gotten grants or where they would even go to get grants. I'd have to check into that to see if there's something, in the area or.
New Cap, I know, is in the past has been able to provide some down payment assistance, and that's NEWCAP. And you could probably just Google New Cap in your county, so Oneida or Vilas, and New Cap has all the information on how to apply for that. They would know how much funding is left for that. and they know how to communicate with the lender, where the source of that money, because all money, they always need to know where your money's coming from, how it got there, that sort of thing. And I do believe with new cap, there is some home buyer education required with that. It might be online, and be minimal, but and I'm sure it is also, income based, I would imagine. But I do believe new cap has had that for as long as I can remember. I do believe though that I'm sure at some point they run out of money each year. So that's where I would recommend checking.
Thank you.
Yes, thank you. So moving on to another question, let's talk a little bit about DIY home buying and selling, because I enjoy a good DIY from time to time, but personally for me, I know like buying a home is not something I want to try to do by myself, but there are people that are selling their home on their own or buying it on their own. So can you share with us, what would be the advantage of working with a realtor versus doing this on your own?
My favorite question of the day. Okay, well, my first most important part of this is the protection involved. Okay, we have so much education and we do so much continuing education. It's not for nothing. I know it sounds like it because maybe a lot of people right now are having luck snagging that buyer. I'm seeing a lot of people having fly by night contracts drafted. So repercussions from home sales can occur after the sale. So I think from all of the necessary contracts being written to protect both parties, to make sure all the disclosures are part of the contract is important. I don't think that a lot of sellers, when they go into certain things, or buyers, they get into some of these and they don't understand navigating their loan and the type of house. And I've seen a lot of deals for sale by owner that have failed because one party or the other doesn't understand the loan program, and they don't know that like their house isn't going to work for their loan program. They just hear, oh, you're pre-approved, because they don't know what else to look for. But aside from that, our trained eyes, review home inspections, review contracts, we review, title work, title commitments. We're communicating with the lender, the appraisers. And the biggest thing I'm seeing is all of these people, yes, they're selling by owner, but if you took the price they sold for, through the realtor commission on top, they still sold for less than what their home was worth. So by simply thinking they're going to save money, they're selling themselves short. So one of my biggest things I like to ask somebody who's trying to sell by owner is, so would you list your house with me if I could get you more than what you're asking and my commission and still get you more money? I mean, I'm seeing so many houses, like the cheapest houses to buy right now are for sale by owners, because it's not just minus the realtor's commission. I mean, they're giving away some of their equity, and it's just lack of the marketing and the strategy that's needed to procure those above asking price offers. I mean, it's so they think they're saving some money and they're not necessarily doing that, but you can arguably end up in court in a lot of situations, from whether you're the buyer or the seller, during the contract, after the contract. And we're licensed and we have special insurance that is in place because we take on that burden. And for a buyer or a seller, they don't have those types of licenses nor the proper insurance. So if something goes bad, and somebody's being held liable, it's them, just them, and the money and assets of their family, their home. That's what's at stake versus, a realtor has, special what we call E&O insurance, that kind of protects us. And we're supposed to be out there up front representing you to make sure these mistakes don't happen, and we have subscribed to a code of ethics. And I just absolutely can't advise possibly going to all the different legal ways that it could go wrong, but it's just highly unadvisable. And I know I will also add that I don't know a realtor out there right now that wouldn't help you buy a for sale by owner if you found one. We can make that happen. So if you found a property that is for sale by owner, you should still tell the realtor you're working with about it and have them take the lead, have them show you the house, and have them talk to the seller right away. You don't have to go that alone just because it says it's for sale by owner.
Well, thanks for sharing that. Erica, we'll jump over to you.
Sure.
Just wondering if there's any common questions you get at the credit union that we haven't brought up during the Q&A so far.
The biggest one is always asking me, should we do, get a realtor involved, or should we just do a for sale by owner? And I always say, get a realtor. They're going to help you and they're going to know more about it than, I will. Or they come in and they ask, hey, can you help me fill out the offer? And I'm like, preferably not. I guess worst case is, the last is get a lawyer too, to protect yourself, but always go to a realtor. They know what's out there. They know, how to fill out the offers to benefit you, the seller, just to help. And any questions that I wouldn't know, they would know, because they're going to know about the home buy market for the houses and all of that. So that would be the best way to go.
Good
And
advice.
to, share with your realtor too what program you have, because then they can help you get the house that's going to work for you, versus saying, hey, I want a conventional loan, but really you only qualify for FHA, which can make or break a deal.
So talking about first-time home buyers, because we mentioned before, it could be a little nerve-wracking making the purchase, and arguably your home is probably going to be the most expensive thing that you buy during your lifetime. So when you work with first-time home buyers, have they ever shared with you any regrets they've had during the process?
Well, most recently, I have actually had, a situation where I had a buyer and I advised her of what I would recommend she offered on the home, and she went substantially higher than I recommended by about 30 grand. And I told her, like $3,000 was reasonable earnest money. She chose 15,000, and she was getting an FHA loan. So she wanted to do these other things to make it stronger. However, the home was not worth what she was offering. So I urged and urged and urged her against the price she wanted to offer and the earnest money, and just let her know a more reasonable place. And sure enough, the home inspection came back and the seller did not want to do any of the repairs unless they were required by FHA. And so the seller was comfortable terminating the offer if they asked for anything. So the buyer said, I still want the house. Okay, fine. Let's just move on. I'll see what the appraiser writes up. And then the appraisal happened and nothing got written up. And it appraised at the value she agreed to pay. So I firmly believe that had she offered less and that offer said less, that there would have been comparables to support the lower price. and she is now, with an attorney to get out of that transaction. Because, the appraisal didn't write up things that, maybe most people would think should be FHA issues. But when all is said and done, you have to trust the people you're working with, trust their knowledge, listen to their advice. It is your decision in the end, but ultimately you have to be sure you're ready to accept, the decisions that you make. Most of the time, the most regrets come from people who are buying in a place of urgency. They waited too long to start looking. And maybe they got a lease up in 30 days and they end up having to settle, or they didn't understand how many houses and offers they'd have to go through to get a house. So my subsequent advice with that would be, you should start looking several, at least 3 to 4 months right now before your lease is up, easily, maybe even sooner than that, because you need the time to be able to wait for the inventory to slowly trickle on. And just because that's your house doesn't mean you're going to win the bid. There's just so many factors with that. And then once you get that, you have the whole timeline. Appraisers and inspectors are overwhelmingly busy right now. So they're taking longer to get things done. So closings are farther out, sometimes 2 months, sometimes 2.5 months out to get things closed, especially on like the USDA and the FHA loans. So the more time you have for shopping, seeing it through to close, and then if you have some extra time left at the end, that's a blessing. And we can further discuss ways you might be able to entice your landlord to let you go early. So, but I would start shopping sooner, and there's a smaller chance you'll have to settle.
Erica, any regrets you hear from first-time home buyers?
Usually the biggest one is they didn't do enough with their credit to start. Because they wish they could have did more with their credit to get it better, to get a better rate, or, get a bigger mortgage, or save more to have more for a down payment. That's the biggest regret I hear. Just starting out.
We did get another question come in through the chat. Do both spouses need to be on a mortgage, or can one spouse apply and get pre-approval?
No, both spouses don't need to be on. But one thing you have to remember is if you both have income, one person needs to be able to support both of their debts. So if you have, if you only have, say, your mortgage payment, that's the only thing you have and your income can support it, that won't be an issue. But if you both have, let's say you have a home loan now or rent, you have a couple car loans, you have a couple credit cards, and if your income is not going to be able to support all of that, then we would have to look at adding the spouse's information.
Well, thank you for that question in the chat. And if there's any more questions, feel free to put them in the chat box. Earlier, you mentioned that, time is everything right now. Like, if you get a call, if you get an email, don't wait 2 weeks to respond back to it, respond back to it right away. So I just want to ask, what is the best way to, get in touch with your mortgage lender or with your realtor? Can you text, call over the phone, Skype, what is the best way?
Well, I have phone, email, text. I'm always here, so if I don't respond right away, I will get back to you before the end of the business day.
I actually had to email my entire database about this recently because I am known, I'm kind of known in the community as the person who responds in an hour or less. but that's just not possible anymore. It's just not. And that's kind of one of my signature things, but um, absolutely. And within, 24 hours is definitely going to happen. But for me, text is absolutely the fastest, or a voicemail on my cell phone, because right now with all the emails, it can get, really just buried down, and then I don't see it for a day or two, and then I feel absolutely awful. But text, I just tend to not read them until I can address them, and then it's sitting there, kind of yelling at me, to respond to it. So yeah, so but phone, email, text, walk in, we have a team. um we kind of operate as a team here at my company. So, if you were to stop in and I wasn't here, when we would just help each other. So there's that aspect of it too. But pretty best at texting. But if you're a call kind of person, I'll talk on the phone too.
Well, as a millennial myself, I'm so glad to hear that you're open to texting, because I think for me and for others, that's one of our, favorite ways of communication, of getting a hold of people. So we're getting near the end of the Q&A, so I will pull up your contact information for everyone on the call. And I know you are both based out of Rhinelander, but can you share, what areas do you service?
Everywhere. No, I do service the entire state of Wisconsin, oddly enough. And I have branched out, but primarily though here for the Northwoods. I will go anywhere in the Northwoods. Absolutely. I, have a deal right now in Marshfield. I might have one in Kenosha, but I primarily home base here is, Oneida, Lincoln, Vilas counties, Price County, Forest County. So, I mean, the Northwoods, we're all used to, I think, kind of driving in all these different directions. And you have to be like that up here, because there's a lot of people that are like, I'll live in the country, and that could be anywhere up here if it's country, or anywhere on water if it's a big lake or a small lake, so it's just wherever they want to be. So there's a lot of flexibility.
Well, I'm primarily, in Wisconsin, mostly northern Wisconsin, but we do have the option to finance with our secondary market company that does license in all 50 states. So if it's, people wanting to move from the Northwoods to another area, we do have that option to help them.
You're muted.
Oh, thank you for calling me out on that. I stopped sharing my screen, and then I forgot to unmute myself. Got a lot going on behind the scenes here. So I was just saying, as we're closing out our session today, are there any parting words that you would like to share with those on the call today?
I would just, encourage you to not feel like you're imposing on someone when you ask questions. We're here to be community resources. Not everybody is ready to buy the day they walk in to talk to a realtor, or to, sit down with Erica. And sometimes they need to understand the path, what's going to be best for them. And sometimes, maybe if you're borderline, maybe doing some things over the next 6 months, might get you in a much better position. But, I'm always available to people in the community for questions. I love educating people on the process and helping them guide through that. So, I mean, if you did take down my number and you ever have a question, I mean, you could just say, hey, I was from that Park City webinar, can you answer this for me, or I thought of that. I'm always available to answer those kinds of questions.
Yeah, and I just have to say, if it's let's get you help, figure out where you need to be and help you along the process, so you know if you're ready now or, like in 6 months. But at least let's help you get you on that path to where you need to be. And any questions that you have that you may think are dumb questions really are not, because if you don't know the answer to them, they're a question. You just need to know what the answer is.
Great final words to go out on. So yes, I want to thank Erica and Ashley both for joining us on our Northwoods Financial Series. I was certainly taking down notes during this, and I know it's extremely helpful information. There's a lot of us first-time home buyers out there, and we appreciate everything that you shared with us on this call.
Thank you.
Thank you.
And I would like to thank everyone for attending today's Northwoods Financial Series session. Our next session will take place at the end of June. We're still finalizing the details for that session, so just stay tuned to the Park City website and our social media for more information. I want to thank everyone again for attending, and we hope you have a great rest of your evening.